Alright guys, in this video we're going to be going over all my trades for the week of January 20th ending in January 24th. For anybody that's new here, at the start of every week I lay out how I'm positioned with calls, puts, and my swing trades, and then I recap them at the end of every week. So this video is going to be how I'm positioned right now going into the week, why I chose some of the trades that I chose, and the macro backdrop that fits into all of this. So we'll split this into covered calls, cash secured puts, and then take a quick look at gold and the economic calendar and see how those two are working together for this week, because we do have a pretty interesting one. All right, diving into calls first, we can start with Robinhood here. This one is nice because we don't have much ground to make up on the stock itself. The premium is pretty fat on this, so it outweighs the percentages that we'd have to move on the shares itself, and this is exactly what I want from a covered call. Premium doing most of the work and not the price. So my shares are at around 108 average price, and we only need to move to around 110 in the next while to actually secure my premium on this and get rid of these shares. I am a little bit interested in Robinhood right now because we seem to have built a lot of resistance to the highs, and we don't really have a lot of support forming at the low. So it's one of those things where I could see this kind of going into free fall if we don't play this very carefully. So I kind of do want out of these shares sooner than later, than rather going for a big stock gain and a fatter covered call position. As it currently stands, I am ahead of my weekly and monthly and yearly goal already with my premiums itself. So I'm not really looking for any big home runs, especially on stuff I'd rather lose and keep my capital more so free, because as you'll see from other positions, I'd much rather have free capital to play with more stuff. With that being said, hopping over to Palantir, we have formed some nice support levels. Our covered call position is very high because I do want more stock gain to make up for the shortfall of owning this for so long. This continues to be pretty slow, steady positioning, nothing fancy. We are just consistently collecting premiums on this stock, so it's a name I'm comfortable holding for the long run. So as long as we continue to put in some great premiums on this, I have no problem owning the shares even at a current loss in percent right now. And then moving into the most annoying position that I have on the chart is actually Dell. Currently, we picked up these shares way back when in November, and we still have not been able to offload these. We came right above my share price. I honestly should have just sold right there, but I had a covered call literally right above it, and it didn't expire in the money. It came all the way down. It is absolutely crashing right now. This is hands down the biggest loser in the portfolio right now. A name I am comfortable holding for the long run. Unfortunately, they have been under a lot of fire with a lot of news stuff right now. So it is one of those things where I can't even sell a covered call because we are so far away from that premium price. So this is where it was supposed to be. I didn't even set it because the premium was like $1. So I don't really care for like $1. I'm pretty sure the fees would be more than that. So we're gonna have to wait this one out and let this do its thing. And this comes with a lot of patience, and you have to be prepared to get into situations like this when you're in the markets. Currently on this, we are down $2,500, but it is the biggest loser in the portfolio. It could be a lot worse when we were open PNL like 5K on IREN. So as far as things go PNL wise, this isn't too bad, but it is one of those things where I just want to offload these shares and use the capital for something else. Now the doozy from last week was QCOM. We really caught a falling knife with this one, and it is not done from what we can see right now. I am confident holding this for the foreseeable future, meaning a couple months if needed. As you can see from where we got assigned, we are down very, very hard right now. In the portfolio, it does say that we are currently down around $1,200. That's not too bad, for a stock like this. I do think this will rebound pretty soon. If we do break below these lows, this is where I would maybe start getting concerned if we start breaking this trend line right here all the way to the downside. But the cover call did pay pretty well on this, so we are just going to wait. We don't have a lot of ground to make up exactly from here to here since we have just been, completely falling. I would expect to start seeing some sort of recovery to the upside on this one. Premium was solid. QCOM as a business is good. I'm a strong believer in semis and mobile chips, so long-term relevance that this is not going anywhere, and I'm okay letting this play out and seeing how price behaves. So in total, we collected $319 this week in just covered call premiums alone. So these are monthly calls. So if you want to be precise, you can look at that roughly through divided by 4 on a weekly basis. So the reality of this is we're banking premiums really well now, and obviously these just got put in today. Now we can hop over to the cash secured put side because this is where it became very, very clean. Starting with the firm, because this is probably the worst one that we had of the batch. We had a great premium with this. It is very close to our strike price, as you can see, but it's nothing fancy here. If assigned, I am fine owning this, especially at this level, because we do have 2 support zones right down here. So if anything, if we did come down, tested here, even tested here, I do have good faith that we will make a good rebound where I can sell a covered call above in the money on this one if we were assigned on this. My hope is that since we are trading very, very far under the EMAs right now, that we will have some sort of recovery. And since this is only like a 4-day trading week, that this really won't cause any trouble or anything, and we can just have this one expire worthless and move on. And unless we do have to get assigned on this, then we will just run a covered call next week. And I do think there'll be really, really good premiums on this. Now, moving back to the king of the portfolio being IREN. This is a very interesting one because we're running it back again with a lot smaller size. I do have a cash gear put sitting right at the $50 mark, which is very, very great, because if it does come back down, I will happily pick up a few hundred shares below my last entry, which improves my overall cost basis. So if not, I just keep the premium and it's a win-win. But IREN's been doing really, really well. I did miss out on like a 14% stock gain because in like the last day before expiry, this thing just like pumped. So it is one of those things where I wouldn't mind even getting in a little bit under where my last price was, and then, you know, seeing how that behaves in the long run. Next is OKLO. We ran this back last week as well, and we're just running it back again because price has creeped a lot lower, and we did have a good amount of room from where it was trading to my strike price. We are pretty much at like lows from a while ago, as you can see here. We do have a good support level right here as well. So if we do continue to fall down, it's a very, very nicely placed strike price where I'm comfortable owning at this position. We have a lot of upside as well to go. So I'm really not concerned if we do get assigned on this, you know, seeing as we are pretty close, but we will have to see how this plays out over the next few days. Red Hit was the funny one because this was the biggest premiums that I had this week. This one really did carry the balance this week, but we literally opened like right at my strike price and then bounced completely off it. So there's nothing really we can do here. The strike is in a great spot, as it seems to be, right at this support level. Premium was very, very strong on this, like I said, so I'm just letting time do its thing here, and we will see how this plays out over the next few days. So last being SoFi, old reliable. I had some capital free, so I just ran a small SoFi put. Nothing very aggressive here. I like it fundamentally, and it's been discussed that there is potential S&P 500 inclusion here. So if I do get assigned, I'm owning it way low and at a level that I'm very, very comfortable with. We are still, you know, decently far away from my strike. We have a good support area right here as we have placed my cash here put position below a current support level. So I do think there is a lot of upside. So if we did dip down, assign myself here, I do think we do have a lot of upside, and I would like to be playing with more contracts on this one in particular. I will say this week was pretty ideal for cash gear puts because especially we have a Monday bank holiday and the markets opened on a Tuesday. So this is why this video is coming out one day late. And personally, these options are really only exposed for about 4 trading days. So less time to move against me, same premium, and that's exactly what I want. And in total, from a puts perspective, we brought in $1,003 just from cash gear puts this week. So when you add it all up, we had $319 from covered calls and $1,000 from cash gear puts, and that's roughly $1,300 for the week, purely from agreeing to buy or sell stocks. That is no prediction, that is no stress, and there is no overtrading at all with this. But let's talk about the macro side of things and how I'm thinking about gold this week in particular. And I'm only really paying attention to the red folder news here. And for me, I'm really only looking at these orange and red folders this week. This week, we do have Trump speaking tomorrow, Wednesday. You know, President Trump speaks. We can only imagine what that's going to do to the market. So we'll be very, very cautious about that. We do have unemployment claims as well, which is a great sign for me to look at what gold will be doing over the next little bit. We have core PCE, flash manufacturing PMI, and flash services PMI. So how does this matter for gold? And all of these feed into the same question of, is the economy cooling or is it staying hot? So the way this matters for gold is that if there is softer labor market data, that puts less pressure on rates. If there's cooling growth, there's more uncertainty. Mixed PMI would often signal a risk off undertone, so it needs uncertainty and easing pressure to continue doing its thing. And I'm not forcing any gold trades here, but the macro backdrop this week continues to support it, especially if the data surprises to the downside. Hopping over to gold's chart, I was finicking with a gold short with a break and retest of this area. And I always say, if the macro and the market structure don't line up, never take the trade, because the market structure was very, very clean here. You can see here how we were getting a lot of touches on this area of interest and a move to the downside. And as soon as that happened, we completely rejected to the lows and gapped higher the next day. So if you were in gold shorts here, I very much am sorry for you, because this would have been just a monumental stop loss to go through here. This is why I always say make sure everything lines up, because the macro backdrop was very bullish on this, even though the market structure was showing me very, very bearish signs. So I did stay out of this. I didn't touch anything here. I've just been kind of relaxing with my puts and intraday, kind of looking through the charts and stuff, but that's really about it. This week is a great example of how I like to trade. Options is doing the heavy lifting, and swing trades only when conditions are absolutely perfect. And with the market in its current formation, I am comfortable with this positioning. Gold is back, ripping to the highs here, so I'm not interested in anything just yet. I would like to see personally some more pullbacks, some more structure being formed, filling this gap area right here so that I can start framing around another trade idea here. But overall, this was a strong week without doing anything crazy, and if the market stays where it is right now, we likely won't get assigned on any of the trades, and if we do, they are at prices that I'm happy at owning them at. So that's the goal, trade less, think more, and let time and probability do the work for you. And I'll see you guys at the end of the week with the weekly recap. But if you have any questions, leave them in the comments below. Make sure to leave a like, subscribe, and we'll see you guys in the next one.